the Digital Lenders Association of Kenya continues to insist that they're in Kenya for the good of borrowers. But, as you've heard from the CBK governor, there are tales of harrowing experiences in the hands of these lenders, and those are the stories, like Dr. Patrick Njoroge says, continue to fill the airwaves. Kevin Mutiso is a spokesperson and board member of DLAC, which is the Digital Lenders Association of Kenya, and he joins me on the show now. Kevin, it is good to speak to you. I'd like to first speak with, start with what you've heard from Dr. Patrick Njoroge on the need for regulation. I wonder what your response is to quite a bit of what he said. Let's begin first with some of the predatory means we've seen of recovering debt that is owed to you.
Yes, thank you, Yvonne. It's a pleasure to be a part of this. The Digital Lenders Association of Kenya was formed for one simple reason. The objective was to ensure that the good digital lenders could protect the consumer. So earlier you mentioned that there are about 110 digital lenders. We've got 20 digital lenders who are members of our association. The FSD report you mentioned said 6 million people borrow from digital platforms. Our members represent have almost 4 million customers. And so we are some of the bigger lenders in the digital lending space. The position of regulation is that we want to be regulated. The objective of the regulation should be to protect the consumers so that we create standards for these debt collection practices. As you may well know, DLAC has publicly denounced the perpetrators of the debt shaming practice. We've had press statements out. So we have a code of conduct as well that ensures that if you're a member of DLAC, you're not allowed to use debt shaming practices. And so we're very categorical that we are formed and we want to help the consumer, not to take advantage of them.
Okay, so Kevin, as you said, for you and your 20-odd members, you are not opposed to regulation?
No, we are not. In fact, we put submissions to the CBK Amendment Bill the other day, and we were very clear that we want to protect the consumer without stifling innovation. Okay.
Let's talk about, where you get your money from, because I think even Dr. Njoroge had alluded to that. Many saying, that the source of this money is also something to think about, to make sure it's not laundering or some suspicious activity.
I imagine that as the CBK being the purveyor of stability, financial stability in an ecosystem, they should be worried, and we are on his team. We actually, as part of the regulation, want a beneficial ownership to be part of the licensing agreement so that we do show where is this money coming from, because it is true that there are some elements that could potentially use our systems for money laundering, and those are some of the ills that DLAC wants to get rid of as well, so that there's a fairer market for everyone.
Okay, Kevin, my last question. How do you determine rates for lending in the absence of regulation, like what CBK does with the banks, with the Banking Act? The SACCOs have the SACCO Societies Act. But how do you determine that? We've seen anywhere from 7 to 15%, and that is monthly. For a lot of people, when you actually sit down and calculate that, it might be just as much as the banks, if not more. So how do you determine the rates of that? Can anybody negotiate with you? Because I think, if I'm not wrong, Dr. Patrick Njoroge removed digital lenders from accessing CRB, for example.
Yes, so the way we price digital loans is using algorithms. I noted that you mentioned that we take data sets and then we use it to score our users. Usually the idea is that the first loan is usually the one we get to know the customer, and the idea is that over time we reduce the prices. And if you look at a lot of DLAC members, that is already happening. And so for a lot of repeat customers, the lending rate has come down. The other thing that we do is that, there's a cost of issuing loans. And so we have to pay Safaricom, we have to pay the people we borrow the money from, because most of us lenders don't use our own money. We wholesale the money. and we get it from the banks. And the banks, for example, already charge 14%. So we can't really compete with the banks when it comes to pricing. So those are some of the things that cause us to be slightly more expensive. The idea is that with regulation, we are going to solve some systemic issues such as fraud. You know, some of the big cases we see, and the governor has mentioned it, is when you hear shows and old grandmothers' IDs being used.
Yeah.
We want to solve issues like that because those are the things that make our loans expensive, because we have to pay so much for fraud systems, fraud prevention mechanisms. And so systemic issues will be solved by regulation, and that's what we actually want as DLAC.
All right. Thank you. Kevin Mutiso, who's a board member at the Digital Lenders Association of Kenya. He's also the CEO and founder of Alternative Circle, saying they are open to regulation and to reducing the cost of lending, as some of that would be solved by regulation in that space. And we might want to add that there is a bill that is in Parliament on precisely that when it comes to regulating the Digital Lenders Association, that have been a great revolution for small businesses in terms of giving them some working capital that they require. But also lately, with big fast exponential growth, also comes some other issues like regulation that need to be sorted out. I'm sure you've heard of instances where, you know, there's phone calls to those in your contact lists, and they say out of their 20 members that they're ensuring that they have a code of conduct for their members there. Kevin Mutiso,